You're sitting at a poker table with 5 friends. Everyone's betting, raising, going all in. The chips are flying. Tens of thousands of dollars are in play. But here's the twist. Nobody brought any money. You're all just writing IOUs to each other. And somehow, it works. Everyone keeps playing. The game goes on. That's basically the global economy. You've probably heard that the United States owes over $36 trillion. Japan, over $10 trillion. China, despite being an economic powerhouse, owes around $15 trillion. Germany, the UK, France, all drowning in debt. In fact, according to the International Monetary Fund, global debt hit a mind-boggling $315 trillion in 2024. That's 335% of global GDP, meaning the world owes more than 3 times what it produces in an entire year. But here's the question that should break your brain. If every country is in debt, who exactly are we all paying back? Where did all this money come from? Who's sitting at the other end of this cosmic ledger collecting interest? The answer is going to completely change how you see money, government, and maybe reality itself. Let's start unraveling this mystery, because the first creditor is probably staring at you in the mirror. We are the creditors. When your government issues a bond, who buys it? You do. Well, not you personally, unless you've bought savings bonds. But your pension fund does, your bank does, your insurance company does. In the United States, domestic investors, meaning American citizens, banks, pension funds, mutual funds, and state governments, hold about 75% of the $36 trillion national debt. That's $27 trillion owned by Americans. Think about that. When politicians say, we owe $36 trillion, they're mostly talking about owing money to ourselves. Your grandmother's Social Security? It's invested in treasury bonds. Your 401k? Probably holding government debt. That safe money market fund your bank offers? Treasury securities. Why? Because government bonds are considered the safest investment on earth. They might not make you rich, but they're backed by the full faith and credit of the government. Translation, as long as the country exists, you're getting paid. In Japan, it's even more extreme. About 90% of Japanese government debt is held domestically. The Japanese people are essentially lending money to themselves, paying interest to themselves, in a financial Ouroboros, a snake eating its own tail. But it's not just domestic lending. Countries are in debt to each other. Japan holds over $1.1 trillion in U.S. Treasury securities, making it America's largest foreign creditor. China is second, with around $800 billion, though that's down from over $1.3 trillion a decade ago. The United Kingdom holds about $700 billion. Luxembourg, with a population smaller than a mid-sized American city, somehow holds $380 billion. Why would countries do this? Strategic investment. When China buys U.S. bonds, it's not just parking money. It's keeping the dollar strong, which keeps Chinese exports competitive. It's also ensuring economic interdependence. If the U.S. economy crashes, China's investment crashes. It's the ultimate insurance policy. You don't destroy someone who owes you $1 trillion. Safe haven. During global instability, everyone runs to U.S. Treasury bonds. They're called risk-free assets in finance. When the world is ending, investors don't buy gold, they buy U.S. government debt. It's seen as safer than any other asset on Earth. Currency reserves. Countries need foreign currency reserves to stabilize their own currencies and facilitate international trade. U.S. dollars are the global reserve currency, so holding U.S. bonds is like keeping cash in the world's vault. Here's the beautiful irony. America is the world's largest debtor nation, but also the safest investment. It's like being so deep in debt that you become too big to fail. Now we enter the truly bizarre territory. Central banks like the Federal Reserve, the European Central Bank, the Bank of Japan are both creditors and magicians. Here's how it works. Governments need money. They issue bonds. But what if nobody wants to buy those bonds? What if interest rates would spike too high? The central bank can create money out of thin air and buy the government's bonds. This is called quantitative easing or debt monetization, depending on whether you're an economist or conspiracy theorist. During the 2008 financial crisis, the Federal Reserve's balance sheet went from $800 billion to over $4 trillion. During COVID, it ballooned to nearly $9 trillion. The Fed was buying bonds, government debt, with money that didn't exist until they decided it did. The Bank of Japan is the undisputed champion here. It owns nearly half of all Japanese government bonds. The Japanese government owes half its debt to itself. It's like writing yourself an IOU and keeping it in your other pocket. Does this break the economy? You'd think so, but Japan has sustained this for decades with low inflation, at least until recently. This is where modern monetary theory comes in. Economists like Stephanie Kelton argue that for countries that control their own currency, the US, Japan, the UK, debt isn't a real constraint. The government can't run out of its own currency. The only real limit is inflation. Now here's a creditor category most people never think about: private financial institutions. Hedge funds, private equity firms, insurance companies, sovereign wealth funds, pension systems managing trillions for teachers, firefighters, and retirees. BlackRock, the world's largest asset manager, oversees about $10 trillion in assets. A huge chunk of that is in government bonds. Vanguard, Fidelity, State Street, these companies hold trillions more. Norway's sovereign wealth fund, essentially their national savings account funded by oil revenues, is worth over $1.6 trillion and holds bonds from dozens of countries. These institutions need government debt. Banks are required by regulation to hold safe assets. Insurance companies need stable returns to pay future claims. Pension funds need reliable income to pay retirees. Government bonds are the bedrock of the global financial system. Without them, the entire architecture collapses. Okay, so let's address the elephant in the room. If everyone owes everyone and debt keeps growing, why isn't this a house of cards? Because debt in a national economy doesn't work like personal debt. When you go into debt, you have to pay it back from your limited income. But governments aren't people. They don't die. They have perpetual income through taxes. And most importantly, they can grow. Here's the cycle. Government borrows money by issuing bonds, spends it on infrastructure, education, defense, things that stimulate the economy. Economic activity increases. Businesses grow, people get jobs, wages rise, tax revenues increase from that economic growth. The government can service its debt and borrow more because its economy is bigger. It's not a Ponzi scheme, it's basically compounding growth. The US debt to GDP ratio is around 123%. That sounds terrifying until you realize Japan's is 264%. Singapore's public debt is over 160% of GDP, and they're one of the wealthiest, most stable countries on earth. What matters isn't the absolute number, it's the cost of borrowing, interest rates, and ability to pay, economic growth, and tax revenue. As long as interest rates are low and the economy grows faster than the debt, the system is sustainable. The US government's interest payments are about $880 billion annually. Expensive, but manageable when your economy generates $28 trillion a year. Here's something mind-blowing. Debt actually creates money. When a government borrows money, say $1 trillion on infrastructure, that money doesn't disappear. It goes to construction companies, who pay workers, who spend at local businesses, who pay suppliers, who invest in expansion. Every dollar of government spending multiplies through the economy. Economists call this the fiscal multiplier. Research suggests that during recessions, every dollar of government spending generates $1.50 to $2 in economic activity. So that $1 trillion of debt can create $1 to $2 trillion in economic growth. The debt created wealth that didn't exist before.
This is why countries don't pay down debt during good times. They use prosperity to borrow more and invest in future growth. It's counterintuitive, but the countries that refuse to borrow often stagnate. Germany's obsession with balanced budgets has led to crumbling infrastructure and slower growth compared to countries willing to invest borrowed money. Of course, this system isn't magic. It has failure modes. The whole thing runs on confidence. As long as creditors believe they'll be repaid, they keep lending. Interest rates stay reasonable. The cycle continues. But if confidence breaks, Greece, 2010, creditors lost faith. Interest rates on Greek bonds spiked to 30%. The government couldn't borrow. Boom, economic collapse, austerity, chaos. Argentina has defaulted on its debt 9 times in its history, currently
paying over 40% interest on some bonds because nobody trusts them. Venezuela, hyperinflation destroyed the currency. Debt became worthless. The economy imploded. Sri Lanka, 2022, defaulted on its debt for the first time in history. The government collapsed. Society unraveled. The pattern is always the same. Borrow in a currency you don't control or lose credibility, and the system eats you alive. But notice something. The US, Japan, UK, countries that borrow in their own currencies have never defaulted, ever. Because in extremis, they can always print money to pay debts. The risk isn't default, it's inflation. Print too much, and your currency becomes worthless. That's the real constraint. So what are the actual risks to this system? Rising interest rates. When rates go up, debt servicing costs explode. If the US had to pay 10% interest instead of 4%, that's an extra $2 trillion annually, more than the entire defense budget. Demographics. Aging populations mean fewer workers paying taxes and more retirees collecting benefits. Japan, Italy, and soon China face this crisis. Loss of reserve currency status. If the world stops using dollars for trade, demand for US bonds crashes. Interest rates spike. The whole advantage disappears. Climate change. Trillions in climate adaptation costs could strain even wealthy nations. Island nations and developing countries could see mass defaults. Geopolitical fragmentation. If the world breaks into competing blocks, US versus China, democracy versus autocracy, the integrated global debt system could fracture. Here's the deepest truth. Money is a shared hallucination. Those numbers on screens, $36 trillion, $315 trillion, they're not backed by gold or land or anything physical. They're backed by collective belief. We believe dollars have value, so they do. We believe governments will repay debts, so they can borrow. We believe the system works, so it works. National debt isn't a burden your grandchildren will have to pay off. It's a measurement of how much the world trusts your economy. The United States can owe $36 trillion because the world believes in American economic power. Japan can owe 264% of GDP because everyone trusts Japanese stability. The debt doesn't need to be repaid, it needs to be believed in. So if every country's in debt, who's the creditor? We all are. We lend to our governments through bonds and pensions. Countries lend to each other for strategy and stability. Central banks create money and lend it into existence. Private institutions manage the investments of billions of people. It's a circle, a loop, a system that seems impossible but functions because everyone agrees it functions. National debt isn't a countdown to disaster. It's the operating system of modern civilization. It's how we fund the future with money that doesn't exist yet, betting that tomorrow will be more prosperous than today. And for 80 years since World War II, that bet has paid off. The real question isn't who do we owe? It's what happens when we stop believing. Because the day the world loses faith in this system, When creditors decide the IOUs aren't worth the paper they're not printed on, that's when everything changes. But until then, the game continues. The debt grows, and somehow, impossibly, it all works. Money isn't real. Debt isn't real. But the roads they build, the hospitals they fund, the future they create, that's real. Maybe the question isn't whether we can sustain this debt. Maybe it's whether we can sustain the belief. Thanks for watching. This channel is all about understanding the systems that run our world. Don't forget to subscribe so you don't miss the next one. See you in the next video.